Today's going to be a very exciting tutorial because we're going to be talking about Fibonacci numbers, and they involve a lot of mystery and we're going to have a lot of fun. So, Fibonacci levels. So who is this person Fibonacci? Well, the real name of Fibonacci is actually Leonardo of Pisa. Fibonacci is kind of a nickname which he got, and most likely it meant a good son was born. He lived in the 13th century, and he's most famous for his Fibonacci sequence. So what is this Fibonacci sequence? Well, let's imagine a sequence of numbers which starts with the number 1. The second number is also 1. And then going forward, every next number is equal to the sum of the previous two. So the next number in this case would be a 2. The next number after that would be a 3, because 1 plus 2 is 3. The next number, 2 plus 3, is 5. The next number after that is an 8. I'll let you guess what the next number would be. That's right, the next number is 13. And so on, just keeps going forever. So what's so great about this Fibonacci sequence that makes it famous? Well, I'll show you right now. Let's quickly plot the number 1 and number 2 on a horizontal axis. Now what we're going to do is we're going to go through the sequence and take every number of the sequence and divide it by the previous number in the sequence and plot our answer on the same axis. So 1 divided by 1 is equal to 1. We've plotted it with an orange cross. Now let's divide 2 by 1 and we get 2. 3 divided by 2 is 1.5. 5 divided by 3 is 1.666. 8 divided by 5 is 1.6. 13 divided by 8 is 1.625. 21 divided by 13 is 1.615. So you kind of see where this is going. The crosses are getting closer and closer to one specific certain number. And that number is 1.6180339, and so on. And this number is known as the golden ratio, which is usually represented by the Greek letter phi. Phi is equal to approximately 1.618. Alright, so by now you're saying, Kirill, you're boring me with all this math. What's the purpose? What's the point? Well, let's have a look at some of the examples of where you can find the golden ratio that will probably blow your mind. First of all, if you measure the distance between the edge of your fingertips and your wrist, and then you measure the distance between your wrist and your elbow, it will be approximately 1.618. Go ahead, pause this video and give it a go. You'll be surprised at how accurate this is. Next, your fingers, actually, your phalanges on your fingers actually are in the same ratio as the Fibonacci numbers, so 2, 3, 5, 8. If you don't believe this picture, then here's an actual X-ray. Also, if you take any starfish and you measure its base and take it as a 1, then the distance between these two limbs will be 1.618. Now, if you want to get even to more depth, then we'll take the Fibonacci spiral, and you can read about it separately, but it's basically constructed of Fibonacci numbers. And you can find the Fibonacci spiral in many, many places in the world. For example, a lot of shells follow the same pattern as the Fibonacci spiral. Some galaxies, not all of them, but some spiral galaxies also follow the golden spiral pattern. So it kind of makes you wonder, how come the Fibonacci ratio can be seen in so many parts of nature? Let's take one more example. Let's take the human DNA. And if we measure its width and its length, then they will be exactly 21 angstrom and 34 angstrom, where angstrom is a unit of measurement for various little things. And if you recall, 21 and 34 are actually in our Fibonacci sequence. A coincidence? Maybe. But that's quite a lot of coincidences. And moreover, what's not a coincidence is that there have been experiments that have proven that figures and patterns following the Fibonacci ratio are much more appealing to the human eye than those which do not. So there definitely is some sort of mystery around the Fibonacci numbers, and nobody knows exactly why they're so common in nature and in the world. But what we can do is maybe take advantage of it, including in trading. So what traders and analysts did, well, they said if the Fibonacci numbers are in our DNA, and if they're more appealing to the human eye, and if they're all over nature, let's have a look and see if we can actually find them on Forex charts. So let's see what they found. If this is a just a random Forex chart, then very often you'll find that if you measure the distance of your trend, so the main part, the upward part, and then take it as 1 unit, and then you measure the distance that the price traveled during the retracement phase, you will often notice that the retracement is equal to 0.618 units. Now the best part is that if you divide 1 by the golden ratio, you will get 0.618. So this basically means that if you take your original trend as 1.618, then your retracement will be 1. So basically you see the golden ratio here. We'll just return back to 0.618, which is the inverted golden ratio. So how can you use this in your trading? Well, let's assume that we don't know any of that. We know that there's been a trend and we can see a retracement is starting. Well, now knowing about the golden ratio, we can predict that with a good chance, the retracement is actually going to go just exactly up to that 0.618 level. And that means we can enter into a sell order somewhere over there, and we can enter into a buy order once the retracement has completed, knowing that there's a high chance that from here on the trend will continue. So that's all theory, but let's have a look at a live example. This is the euro-dollar 4-hourly chart, which I took a snapshot of yesterday. As you can see here, we've got a downward trend first of all, and then we've got a bit of a retracement. So how about we go ahead and measure them? So the downward trend started up here, then the price went down a bit slower, went down fast, went down a bit, went actually up again, went down, and that was the end of the trend for now. Then the price started moving back up, went down a bit, and then went back up. So we're going to measure the distance between those 3 points, and those lines indicate where our measurements will be. So if we take the original trend, and we take it as 1 unit, then you will notice, and you can take a ruler and measure this on your screen if you like, or even open up the same chart and perform those measurements. You'll notice that the retracement was exactly 0.618. And I didn't have to look for this example. This was the first chart I opened up, euro-dollar 4-hourly time frame, January 2015. You can scroll through any chart you like, and sooner or later, actually sooner rather than later, you'll find one of these examples. So the golden ratio is very powerful, not only in nature, but also in our Forex trading, and we can use it to our advantage. And you will see examples of this in our live Forex trading further down in this course. By the way, if you're using MetaTrader 4, there's a very handy way to measure these retracements. If you go to Insert Fibonacci Retracement, you'll get a very handy tool which allows you to effortlessly measure Fibonacci retracements.
This video is going to show you how you can make money trading the Forex using Fibonacci ratios. There's 2 main types of Fibonacci's, retracements and Fibonacci profit targets. Fibonacci retracements show you low risk places to buy in the direction of the uptrend on a short-term pullback. Fibonacci profit targets are where the market usually will move to as the trend continues and then stall or reverse. Let me show you an example here. The market is moving from the bottom up, and you want to draw your fibs on here. You left click on the chart using leveragefx.com's Fibonacci tool. Left click and drag all the way to the top. So this shows the 38.2% Fibonacci pullback, the 50%, and the 61.8. I usually recommend to new traders the directional move has to be 25 to 30 pips or more, and you want to buy the 50 or 61.8% fib pullback. So let's look at this particular example. The market pulls right down to the 61.8% level. If you would have bought it to 50 and scaled in it to 61.8, the market continues its uptrend. See, the market makes a move up, pulls back, and the fibs give you a low risk place to buy in the direction of the trend in anticipation of the trend to continue. Now as the market goes up, you'll see our Fibonacci profit targets are then displayed. This is the 1.382 Fibonacci profit target. Most times the market stalls at this level. Strong trends will go to the 1.618 level, then reverse. If you're a counter trend trader, using the Fibonacci profit targets, using LeverageFX's properly set Fibonacci levels, is one of the lowest risk places. So you could get into your short right here at 1.3195 and scale in again up here at 32.04, and you can see the market pulls back about 15 pips. Goes up and tries to test the high again, forms a double top, and then pulls back about 20 pips off the high. So this Fibonacci system lets you get into the trend on a pullback. You buy here, the market goes up here, you exit your longs, and you consider going short if you're a counter trend trader. This trade right here found about 40 pips up, and the counter trend trade found about 20 pips on the way back down. Let's look at other examples. Here the market's in a strong uptrend. It obviously is a failure because the market explodes down, right at 10 o'clock, right during news. You want to draw your fibs on here from the highest high to the lowest low. And then as we scroll into the future, we want to get short here at the 15 to 62% level. And in this case, it didn't actually hit the 62% level. Our short right here at 31.65 fell about 20 pips as we are anticipating the downtrend continuing, which it does. Let's go look at another example. Here's an example where the market shoots down, comes back up to the high, fails to break out higher, comes back down again, fails to break out lower, tests the high again, and then finally breaks down and makes a lower low. So now we can assume the trend is down. You want to wait for the first consolidation area to draw your fibs. So you draw it from here to here. And because the market's not able to retrace up to the first 38% level, I suggest not buying the first 1.382 fib profit target. You want to buy the second one, because this is a sign that the market's not even strong enough to retrace back up to even the most minimal retracement levels. So if you're a counter trend trader or you're trading with the trend, you want to hold on, and this is an excellent place to get out of the trade at. Let's see what happens. Market just touches this area to the pip and retraces back up about 40 pips. So for those of you who are short, it gives you the absolute perfect place to get out of your trade. You would have caught 100% of the move, and you can trade counter trend there very safely because you can risk 5 or 10 pips, and in this case the market went up 40 pips your way. When you risk 10 pips and you make 40 pips and you're right 50 to 60% of the time, you make a ton using the Fibonacci tools in the Forex. Let's look at another example. Here's another example. The market shoots up, fails at the high and comes back down, makes a lower low. We can now assume the downtrend's in place, and we want to scroll over, and if you draw your fibs on here from the high to the low, notice the market retraces right up to the 38% fib level and stalls. This is a relatively risky area to get into trades, but it does work when the market's really weak. Let's scroll to the right and see what happens. Breaks down and it's going to a lower low, and you can see the market stalls right at the first Fibonacci profit target. If you're short right around here, this is your first profit objective, and in this case you made about 35-36 pips. And if you're a counter trend trader, you can wait for this level to get into a low short-term counter trend trade. You would have bought here at 31.45. The market went up about 20 pips. Actually went up about 45 pips. So that's a low risk place. If you risk 10 pips down there, again, in this example, you made about 45 pips while risking 10. And these Fibonacci profit targets are about 60 to 70% accurate in my testing.